You're listening to the Cash Podcast, creating affluence, success, and happiness with your financial surgeon, Adam Koós, President and Portfolio Manager at Libertas Wealth Management Group at libertaswealth.com.
All right. Hello, everyone. I hope you're enjoying the fall weather. I know I am. This is my favorite time of year, being the pale, freckled ginger that I am. I had the pleasure of speaking to a top-notch residential realty firm in Millennium Group with Rachel Alley and Jonathan Tomko a few weeks ago. And we were talking a lot about how the real estate market has been really hot. Obviously a great thing for sellers, people looking to sell their homes. But the other thing that's on fire is the mortgage business, because with interest rates hovering around historic lows, whether you're looking to lower your payment on your current home, buy a new home, of course, maybe do a little bit of home improvements during the pandemic, or both, the refi business is booming as well. But before we jump into that, if this is your first time listening or watching, thank you for joining us. The Cash Podcast is produced weekly. And as stated in the intro, Cash stands for creating affluence, success, and happiness. And that's our mission. We want you to learn a little bit more on each and every episode so that you become more successful, wealthier, happier, and more educated than you were when you first started listening today. So come back often, subscribe on YouTube and iTunes, and all links, visuals, even though we're not going to have any today, any links, visuals, and other educational material, easier for me to say, resources can be found online at libertaswealth.com. So let's get started. But before I jump into the questions, I just want to formally introduce Dan Jenkins, who's joining us today. He's a senior mortgage consultant with the 614 Group and CrossCountry Mortgage. He's been in the financial sector for 25 years, believe it or not, since 1995. No, he doesn't look like it. And he specialized in residential lending since 2010. So he serves as the president of the Central Ohio University of Kentucky Alumni Association, which means he absolutely hates basketball. And he's the treasurer of the New Albany Realty Association. Dan is originally from Northern Kentucky, but he's been a resident of Central Ohio for the past 16 years. Today, he lives in Gahanna with his wife and daughter. And a fun fact about Dan, he was a competitive swimmer growing up and was coached by Michael Phelps' coach before he started coaching Michael Phelps. So we have our first ever fish on the podcast. That's a pretty cool fun fact.
Yeah, I share that one a lot.
Yeah, I'm sure that the coach learned all kinds of tips from you, and that's why Michael won all those gold medals, right?
That's my story. I'm
secret tips, right? Well, no, in all seriousness, thank you so much for joining me today and going over some of these things. I know I'm in the process of going through a refinance myself that started earlier this year, and we've been recommending refis to a lot of our clients. In some situations, I think clients get surprised and they say, "Well, I'm paying 4%. Why in the world would I want to refinance?" And it's like, well, I said the same thing when I was paying 5 and refinanced at 4. So anyway, I've got a bunch of questions for you, but what would you say, I guess, just to kick things off, what would you say is some of the most important things to consider just to keep things basic here to start? So when getting a loan, what are some of the basic things people should be thinking about?
Well, first of all, thanks for having me. I appreciate it. And when somebody's just kind of starting the process, I think that the most important thing that you can do is work with somebody that you trust. And obviously that, I think that goes hand in hand with a lot of businesses, yours, mine, a lot that are out there. But I don't think that can really be overstated, because there's so much going on in a mortgage loan transaction. One of the mantras that I've really adopted over the past couple of years is that I view my job as translating the transaction, because there's very smart, very educated people that look at some of the numbers as, they are mandated to be disclosed, and they're going every which way. And so you say, hey, what the heck is this? Even if you're a PhD, right? So my job is to translate that and make sense of it. And that can happen, and it does happen on really every transaction. But if you're not dealing with a trusted advisor, then there's always kind of some level of doubt. So that's why somebody like me, I want to put myself in a position to be a trusted advisor, and earn somebody's trust so that we can really get down to the nitty gritty of, okay, what's really going on here. So I think that's number one.
Okay.
Number two is when somebody's considering taking out a mortgage loan, either to refinance their current loan, or if they're applying for something because they're getting ready to go buy a house, make sure that if you get to a point where you're kind of comparing situations, comparing something that you've been offered with maybe something you saw an advertisement for. Make sure that you're speaking in apples to apples terms, because more often than I can think of, I'll get a call and say, hey, I just got an advertisement, and saw that rates are at 2. Okay, that's great. Is everything else the same, or are we dealing with an apples and oranges situation? Mm-hmm. And almost always we're dealing with an apples and oranges situation. And again, that kind of comes back to translating the transaction. What are we really dealing with in this scenario versus this scenario? So if you're dealing with somebody that you trust and you have kind of an approach and a mentality of making sure that it's apples to apples, I think that that's a good place to start.
Okay. Now, you've been in this business for a long time, and I think it's important, obviously, that people, whoever they're working with, that they work with somebody who knows what they're doing, and I think that goes without saying in your case. But tell me, because you've been around for a long time in this business, tell me how the current environment contrasts with maybe a year ago, 2 years ago. I mean, obviously, there's interest rates, right? I mean, we can talk about that, of course, but when you consider the housing market, the coronavirus pandemic, all that, how is that impacting your job and mortgage lending in general for people who might be listening or watching, considering refinancing their home or buying a home?
Sure. Well, you're right with the interest rate environment. I mean, certainly in higher interest rate environments, it's not as refinance heavy. Mm-hmm. In higher interest rate environments, nobody's going to refi out of their current situation. So that's an impact. I would say in regards to something like COVID, because obviously that's really wide reaching, has really broad tentacles and touches everything. With us, I would say just from an underwriter standpoint, which, an underwriter is obviously the person that kind of puts their stamp on the loan and says, okay, we're doing it or we're not. My job is to make sure that I can get in their brain and understand what they're going to say. But from an underwriter standpoint, they're really kind of getting they're quite conservative nowadays, as you would expect with some of their discretionary decision making. And that doesn't mean that things that would qualify in the past would not qualify now. I guess that happens, but that's rare. What really is kind of happening is, I would say, more around the lines of income and income calculations. For example, if somebody is an hourly employee, with COVID happening, were their hours scaled back? Is there documentation, their pay stubs going to reflect that is the case, or have they always gotten the same number of hours that they've always gotten? That's one example I can think of. Another is with somebody who may be self-employed. Even if they've been self-employed for a long time, they've got lots of historical financials, but obviously COVID happened within this calendar year. So how does that impact things? And I
can actually speak to that personally. I mean, sure. I had to provide 2 years of tax returns, a P&L for the last 2 years, as well as a projected P&L through the rest of the year. Bank statements, of course, all that stuff, investment statements, but it was a lot more exhaustive than it normally is, because obviously, to the industry's credit, I'm sure what they're trying to do is avoid another mortgage crisis, right? I mean, that's the last thing we need right now.
Yeah, that's right. I would tell you too, with some of those bullet points that you kind of rattled off there, I mean, a lot of that is part and parcel of the process. Mm-hmm. But the stuff that obviously is impacted by COVID is going to be your year-to-date 2020 stuff.
Sure.
Right. I mean, COVID wasn't here.
Makes sense.
More or less, it wasn't here in 2019. Not to the extent that it was going to affect your tax returns and things like that. So really anything, again, whether it's wage income, self-employed income, from this year, I think underwriters are just being a little bit more conservative with that. And again, it's my job. I mentioned translating the transaction, but also having foresight to when we think that things may, be maybe a little bit more problematic than in the past, to try to kind of sniff that out at the front end of the process. So, that's one thing. And the other thing is, with COVID, it kind of parlays into the housing market, which is obviously on fire. And it's on fire because inventory is way down. Sure. I think one of the big factors that causes inventory to be way down is just the general uncertainty that's out there. Is somebody going to, are they going to sell their house and go someplace in the middle of this thing? So, there's a lot of people that answer that question, yes. But there's a lot of people that answer that question, no. And I think that kind of the growing number of people that are answering that question, no, keeping inventory low, driving prices high. And that in turn, it's a big domino effect. When that happens and inventory is as low as it is, the big thing that's impacting my industry as well as Rachel's, with being a real estate agent. If you ask any real estate agent, they'll tell you the problem, 1A and 1B right now is appraisals. Because they're not getting the value out of the property from an appraisal standpoint that was agreed upon in a purchase contract. That's not so much of an issue with refinances, as you can imagine. But when it comes to getting a mortgage loan for the purpose of purchasing a house, they're really backlogged due to the refinances, but they're also not getting the valuations. So that
I will say that our appraisal came back lower than the tax assessment, and that's not necessarily a bad thing when you're refinancing, as long as it appraises as much as you need it to. I mean, I'm going to be making a phone call and sending a letter down to the state to have our taxes reduced, of course. So even though it's not as likely with refis as it is with new purchases, I think that there could be a win-win there, I guess is what I'm saying.
There can be, but I think that, generally speaking, those are kind of like the main bullet points that just the current 2020 environment is presenting that are kind of unique to this time frame. And hopefully we're coming to the end of, most of that, other than the property appreciation. Everybody kind of likes that.
When you make another interesting point that I think is interesting is that, the irrefutable law of supply and demand. I think too many times people think about the demand side and they don't think enough about the supply side. And in this case, I guess I hadn't thought too much about the fact because, I don't sell houses all day or refinance them for that matter. But I hadn't thought about the fact that while you might have the same demand or even less demand, that if obviously the supply of homes available goes down in a much faster rate, then that's going to drive prices up as well. So there's two levers going on here, both of which matter, right? But
and to speak to your point about supply, really inventory levels have been kind of trickling down here in Central Ohio, at least, really in the Midwest, generally speaking, for the past 3-4 years. I think that's really a direct result of Columbus being underbuilt from when the mortgage crisis actually did happen back in 2009, because big banks weren't lending money, so builders weren't building. So you got a whole convergence of factors. Now, builders have been firing away for the past couple of years, but it's going to take some time to catch up, and that's a big factor.
What would you say, just out of curiosity, 10 people walk in and ask, you're curious about getting their home refinanced. Mm-hmm. Out of those 10, how many of those does it make sense to actually do a refinance today?
That's hard to say. And honestly, I would tell you that's a good answer to the question, because every situation is really, really customized.
Sure.
I mean, there's an adage out there, which honestly I hate, which is, hey, if you can save 1% in interest rate, you should definitely. And honestly, that's baloney.
That bothers me too. There's a lot more to it.
It's because there's so many other factors. What type of a loan do you have? How far into your loan are you?
Mm-hmm.
Are you 2 years in, or are you 12 years in? What are you trying to actually accomplish? Are you going to be in this house for long term, or are you just going to be in a couple more years?
And that's the biggest key right there. Yeah.
Yeah, it really is. But here's how I'll answer your question. 10 people walk in. If they're wondering whether or not they should refinance, 100% of those people, all 10, should sit down and ask the question. And
sure, I agree with that.
Yeah, I mean, I'm not a high pressure guy on the front end of the process. During the process, when things have to happen at a certain, at certain time intervals in order to get done what we promised, then sure, then we'll have some urgency. But I'm not afraid to sit down with somebody and say, okay, based on what you're telling me, this doesn't look like it makes sense right now.
Sure.
So
that's important. But I think that I guess the point is that you don't know unless you get the second opinion and find out. Sure. And you have to run the numbers. And I did it 3 years ago where I walked in and said, hey, should I do this? And it made no sense at the time. But I don't know. Earlier this summer, I thought, I wonder with interest rates tanking in March if it might make sense. So, and it did. So I think it makes sense to at least check it out. Worst case scenario, you find out you're fine, and I guess there's peace of mind in that too, right?
Yeah. And I think stress testing one situation is always a smart play.
Yeah, for sure. We talked a little bit about unique situations a second ago, just kind of touched on the tip of the iceberg. But, what are some situations where creativity might be required? Let's just say when obtaining a mortgage, maybe share some examples of situations where people might need to get really creative when it comes to the financing, whether it be refinancing or purchasing a home.
Sure. Creative financing, air quotes, right?
Sure.
That's always got an interesting connotation to it.
Right.
So
we're not talking about illegal, right?
Right. That's I want to be full disclosure.
I want to know what legal things we can do.
but yeah, so we're talking about things that are, situations that are firmly within the, regulatory guardrails and things like that. We're not going backwards here. But I think a lot of times how that kind of manifests, you get a couple different ways. First of all, if somebody's transitional, right? And there's a lot of situations out there where somebody tries to time it, right? If they're transitional, moving out of their house, getting a new house, something like that. And they want to try to time it so that, ideally speaking, you close on the house that you're selling the same day that you close on the house that you're buying. Very clean, right?
That'd be nice.
But that happens a low percentage of the time. So most people out there, if there's a bit of an overlap there, they sell their house before they close on the house that they're buying.
Sure.
From an underwriting standpoint, they got to carry both those mortgage payments.
Mm-hmm.
So how does that happen? While there are product enhancements, that are happening with a lot of lenders, including the one that I'm employed by, I would tell you that the old adage of it's important to know a banker is really vital here. Because it's not just about your product offering, it's about, how many tools do you have in your tool belt to use? And no lender is going to be able to do everything for everybody all the time. I just encountered a situation where, again, due to my time in the business, not just residential lending, but also consumer lending and commercial lending, it all kind of came into play, where I needed to involve somebody outside of my company. So I didn't have the product offering to be able to do what was needed. Okay. And that's not to say my product offering is narrow. It's not. But I knew what we needed to do. I knew the tool in the tool belt that needed to be used. But it wasn't as simple as just determining, hey, who offers this particular product? This particular situation was very sensitive from an income standpoint. So I needed to find out details of how these other places actually underwrote the product that I knew we needed to use. So talked to 5 different places. 3 of them weren't going to work. 2 of them were going to work. So we just kind of went from there and we worked something out. So being able to help with that type of transitional situation was great for the borrower, great for the referral partner. It worked out. And the other thing that I'll mention too is that, with 95+% of the mortgage loans that are out there, they end up on the secondary market. A lot of your listeners probably heard of that.
Sure. Yeah.
Right. The government sponsored entities like that.
Happens all the time.
Yeah. Right. it happens most of the time. Yeah. So that means from an underwriting standpoint, it's got to fit nicely within the box. From an income standpoint, every discernible way. When you've got a creative situation like that, that could be a situation where we're talking about a type of loan that, again, perfectly compliant, but it's not going to end up within. So there can be some kind of give and take. As long as there's compensating factors, then we may be able to look at income a little bit differently. Or if there happened to be some sort of a credit situation that appears to be an outlier, something like that.
You're saying bad credit?
Say again?
You're saying bad credit, I assume? Yeah?
No, not necessarily that. I can think of a circumstance a couple years ago where I did a loan for somebody who she had all the documentation in the world of who was supposed to pay what in her divorce from 3 or 4 years back. So she had documentation that her ex-husband was supposed to pay this, and he didn't, and it showed as a negative on her bureau. She had 20 years of positive credit. So even though that was not going to fit nicely in the box, we were able to do it based on the compensating circumstances and based on her documentation.
Understood. Okay, that makes sense.
So there's the good news is that I would say is when yes, I'm a residential mortgage professional, but when you know other people in the field and you know who can do what and who's got an appetite for what, then I want to view myself as a resource for everybody. And if I do that, and other people out there who I think are good at what they do, they view themselves the same way.
Well, I think you probably want to not make the assumption that it can't be done. Always kind of goes back to what we said earlier. Just always check. It might take a little bit of work, but it's probably worth it in the end.
Right.
Worst case, you get educated, I guess. What about bad experiences, good experiences in your industry? You and I were talking before we started today about, people in the past who maybe had bad experiences with getting a loan. Mm-hmm. What kind of things typically cause that, from an expectation setting standpoint?
Well, let's not kid ourselves. Getting a mortgage loan is not like going to Disney World, right? It's not something that people say, hey, great, I'm glad I did that. I can't wait to do it again. Right? That's not what this is. Yeah. It's more like going to the dentist, even in the best case scenario, where sometimes the process will be smooth. I mean, that happens most of the time, but nobody's really eager to engage in this thing again. So I think that a lot of times what ends up happening is that folks who have the job that I have, and again, trying to consult and help people through this, maybe they either lack foresight or lack due diligence about the specific situation that they're dealing with.
Okay.
The specific situation with the borrower themselves, maybe the property itself, just something about it. I would tell you that that's the type of thing, personally, I try to pride myself on, because I think it's just very wise to do a disproportionate amount of work and due diligence on the front end, just to make sure that we know exactly what we're dealing with, so the process is as smooth as possible. And I think that some of the bad experiences are caused by people not doing that. I guess the other thing that I would add to that is, you mentioned the word expectations. Mm-hmm. And I think that there's a lot of people out there, regardless of industry, who have a lot of room to improve in setting proper expectations.
Sure.
So if I'm doing your mortgage loan right now, and we talk about terms that are agreeable to you and you like, I think it just makes sense for you and for me to talk about what's next and what's next and what's next and what's next. Sure. So that when you get something, emailed to you, or this happens or that happens, you're not surprised. So I think that there's a lot of that. And, the other thing that's kind of interesting, it goes back to something you were saying before, when you're talking about the documentation that you were asked to provide. Oh, sure. Mm-hmm. I can guarantee you, whether it's Dan Jenkins or any other mortgage lender out there, nobody's asking for documentation that they don't really need to get the deal done. Sure. But sometimes borrowers have a certain idea in mind, and they say, well, you should have everything that you need. I can give you my word, and I can speak for others that folks are not asking for something that they don't need.
Sure. So it's a hassle. I mean,
but that goes back to expectations as well.
Yeah. Yeah. I mean, it's a hassle. Everything's electronic these days too, which, is easy for some and not so easy for others. So yeah, I found it very simple.
Yeah.
But yeah. What about, what if somebody's, say, apprehensive about how or where to begin the conversation? So maybe they're listening to this or watching this on YouTube, and they're saying, I keep thinking maybe I need to look into this, but I just don't know if it's going to make sense for me. I mean, how do they begin that conversation? I mean, how much work is it? What should that person do?
Well, I think when you use the word apprehensive, I think that is both expected and justified in a lot of cases. I mean, let's face it, these are complex transactions, even though they happen every day, and they're personal transactions, right? I've encountered a number of different situations where personal circumstances are difficult. It's difficult for somebody to go there. They don't want to go there, and they know that that's going to impact something mortgage related. And that doesn't mean it's adverse, but it's just, there's something. I guess that kind of goes back to your initial question, that is, hey, seek out somebody that you can trust. And while I won't go as far as saying rip the Band-Aid off, because that's, I wouldn't say that. What I would tell you is that it's important to know what a realistic snapshot of reality is if pursuing a mortgage loan is something that you're interested in. Again, whether you're talking about a purchase loan or whether you're talking about a refinance. So not everybody out there is wired to necessarily be a hand holder. I happen to be, because frankly, I ask my wife, she'll tell you I need to have my hand held when it comes to a lot of different things.
We all have our strengths.
Yeah.
And weaknesses.
Right. But I think that's something, if somebody is apprehensive, I think that's where it becomes wise to sit down with somebody, and somebody who is going to take a bona fide interest in what your circumstances is, and really just try to come up with a game plan. Maybe it's a short-term game plan, such as, we just need to collect this or this, and you could really go forward if you wanted. Maybe it's a long-term game plan. This has to happen, this has to happen, and in order for you to do what you're looking to do, we could be talking about months or years. But I think that if somebody is seeking what the reality is, just sitting down with somebody who can give them the answer, that is important.
Right. Well, I think that with some of it's hand-holding, I think that can also be called checklists. It can also go back to setting expectations right up front, perhaps with a checklist that says, here's what we're going to have to do. And then saying, I'm sure that you could probably look at some people who walk in the door and say, hey, Dan, I've got this $400,000 home. It's got a mortgage on it. I'm going to be there for the next 3 years is all before we move out of state. And my interest rate is 3.1%. I mean, that's going to be a pretty quick conversation, I would assume.
Yeah, I mean, it really is.
That person probably should not refinance, right?
And the biggest factor right there is, you mentioned the interest rate, but the biggest factor is how long you're going to be in it.
That's right.
There's some costs at the front end that everybody knows about that you got to recoup, and is that going to happen in 3 years? Yeah, it could, but is it worth it?
Yeah. It's a lot of work if you're barely breaking even in the time you're going to be there, of course, right?
Yes, right.
Yeah.
Right.
All right. Well, thank you so much for sharing all this information today. And Dan's contact information, if you're watching on YouTube, will be below in the information details. If you'd like to get a hold of him, you're listening on iTunes, feel free to reach out to us via email, check out our website, or you can. We're happy to make a personal introduction. But that's it for today's show. Feel free to share this episode with your friends and family. If you'd like to discuss your personal situation further, having to do with mortgage refinancing, or anything else for that matter, remember, you never have to be a client to ask a question. So feel free to reach out. We're always happy to help. If you'd like to set up an introduction call with us, with Libertas Wealth Management Group, for retirement planning, financial planning, estate planning, tax planning, and so on, you can also set up a Zoom meeting. Just head over to our website on the contact page to get access to our calendar. As I always say, there are thousands and thousands of podcasts out there, and you gave ours a listen today, and I really appreciate it. So thank you so much for tuning in. Be sure to subscribe again on iTunes and YouTube. You can sign up at libertaswealth.com to get these updates, as well as our other screencasts, videos, and articles delivered directly to your inbox. In fact, we're recording a screencast today or tomorrow with a quarterly update on the stock market, as well as an article that's going to be coming out next week as well. So feel free to follow us on Facebook. I'm also on Twitter at Adam Koós and Instagram at Financial Surgeon. So thank you so much once again for joining us, and we'll catch you next time.
Thank you for listening to the Cash Podcast with your financial surgeon, Adam Koós. To see any charts or images that were mentioned in this show, or to check out additional articles, videos, and other educational resources, head over to libertaswealth.com.